What this course covers. Sections 1 through 3. Welcome to the 3-statement financial modeling course with AI. This course teaches you to turn business research into a forecast model that produces EPS, EBITDA, and free cash flow. Most courses start with the spreadsheet. This one starts with the business, because every number in a model must come from a reason, not a formula. What this course covers. Sections 1 through 3. The course spans 22 lessons across 59 learning modules in 7 sections. After every lesson, you complete a quiz built around a real modeling scenario. In Section 1, what analysts build before they open a spreadsheet, you will understand what a financial model is actually for. You will learn how sell-side, buy-side, M&A, credit, and restructuring analysts use the same 3-statement model for different purposes. You will use AI to accelerate filing review while keeping every forecast judgment with you. In Section 2, the blueprint top analysts use before building a model, you will download the NVDA modeling template and understand its full structure before building anything. You will learn why model build order determines whether final outputs are correct. You will read historical financials to extract modeling signals, not just trend lines. In Section 3, understanding the business before forecasting revenue and cost, you will apply the revenue formula every serious model starts with. You will read product, value chain, and customer signals to determine pricing power and volume drivers. You will convert that analysis into quantified forecast logic, not generic growth rate assumptions. What this course covers. Sections 4 through 7. In Section 4, how to build the core schedules that make the model work, you will build the 5 driver schedules that feed every financial statement line. You will model revenue from your business thesis, CapEx and D&A, working capital, debt and interest, and share count that produces the correct EPS. Each schedule flows into the income statement, balance sheet, cash flow statement, EPS, EBITDA, and FCF. In Section 5, complete the 3 statements from your schedules. You will assemble the full model. You will build the income statement from revenue through gross profit, EBIT, EBITDA, net income, and EPS. You will complete the balance sheet using schedule-driven assets, liabilities, equity, and retained earnings. You will build the cash flow statement and derive free cash flow. In Section 6, you will verify, calibrate, and stress test the completed model. Run the 6 verification checks that confirm the model is actually done. Calibrate projections against management guidance, consensus revenue, and consensus EPS. Build bull, base, and bear cases with sensitivity tables testing EPS and FCF ranges. In Section 7, AI simulation and Excel execution, you will defend your full model under IC pressure and build a complete NVIDIA Excel model from source verification to scenario output. After every lesson, applied tasks using 10K filings, Yahoo Finance data, AI prompts, and Excel models produce analyst-grade forecast outputs. The AI simulations, where modeling judgment gets tested. After all 7 sections, you enter 2 practice modules testing whether you can apply modeling skills under real professional pressure. In the ArcLight Semiconductor IC pressure test, you act as a junior equity research analyst at Meridian Growth Fund. You build an initiation model for ArcLight Semiconductor, a fabless chip company with 55% revenue growth, rising CapEx, and a new product line with no historical data. A senior PM places you under investment committee review across 10 progressive scenarios. You justify why business research must precede every modeling assumption. You translate edge core and neural edge segment dynamics into PJ multiple QJ forecast inputs. You build CapEx, D&A, working capital, and debt schedules under operating leverage stress. You complete all 3 statements with a verified balance sheet check and cash linkage. You calibrate against guidance and consensus, then construct bull, base, and bear cases for the IC decision. At each step, submit your response and receive instant AI scoring on accuracy, relevance, and executability. In the Alphabet Simplified Modeling task, you build a 1-sheet financial model using 10K data and AI-assisted extraction. You set segment growth assumptions for Google advertising, cloud, and other using PQJC logic. You construct CapEx and working capital inputs, verify figures against the source filing, and write commentary on whether your forecast produces a bull, base, or bear case. What you will walk away with. Complete this course and you will build a verified, defensible three-statement financial model from scratch. You will read any 10K and extract business signals that become EPS, EBITDA, and FCF assumptions. You will translate pricing dynamics, volume drivers, industry forces, and cost structure into segment-level assumptions. You will build every driver schedule correctly and understand how each one flows into final model outputs. You will run the 6 verification checks, resolve every error, and calibrate against guidance and consensus. You will use AI to accelerate extraction, data organization, and commentary while keeping all judgment with you. You will leave with the NVDA 3-statement modeling template: historical data, 5 driver schedules, 3-statement assembly, 6 checks, and scenario analysis. This is not just a template to study, it is a workflow you can apply to any public company from day one. The 2 practice modules tested your judgment under realistic IC pressure. The 87 quizzes confirmed that your modeling logic runs deep enough to explain every number. The 9 applied tasks produced real model outputs from real company filings. By the end, you will build a 3-statement model, verify it, calibrate it, stress test it, and defend every assumption in it. One, the financial model behind every investment decision. What this model actually produces. If you work in finance or plan to, there is discipline. Every valuation is just a guess built on assumptions with no Part 2. Sell side versus buy side. The 3-statement model is used across every corner of financial market contexts. The model is not optional. It is the starting point from which every downstream financial judgment flows. Part 3. What is an earnings surprise? One of the most direct ways to see the power of a financial model is through what markets call an earnings surprise difference. That structured thinking process separates a professional forecast from an uninformed guess. Part 4. AI in financial modeling. Today, AI tools have entered the financial modeling workflow in ways that are now standard practice at many firms, and this course will show you how to use them at each stage of the process. In the research phase, AI can read an entire 10K filing or earnings call transcript and extract the key assumptions you need for your model within minutes. For example, if NVIDIA's management discusses its data center revenue outlook across 80 pages of an annual report, an AI tool can identify and summarize those statements into a set of structured inputs ready for your model. In the modeling phase, AI can generate a first draft of forecast assumptions based on historical trends, flag logical inconsistencies in your revenue or cost projections, and propose alternative scenarios. In the output phase, AI can convert your completed model into a structured equity research note, an investment memo, or a management presentation summary. What AI cannot do. AI does not replace the analyst's judgment about which assumptions are defensible and which are not. It does not tell you whether a 40% revenue growth assumption for a semiconductor company reflects realistic supply chain conditions or wishful thinking. That judgment comes from understanding the business, the industry, and the competitive dynamics, which is exactly what this course builds. AI accelerates the process of going from information to structure. The analyst decides whether that structure reflects reality. Two, why business research